you took full ownership, accountability, and responsibility for your own fuck ups, which is what a real business leader should do.
But I just see that as you're an absolute waste of public money, and the bureaucracy is getting fucking ridiculous.
2016, there was $288,000 for a house. It was 664 Bitcoin. In 2024, 434. So the house price has doubled over that period of time.
I specifically said don't cut it too short, and look at it.
If we continuously have ever-increasing laws and regulations, eventually everything will be illegal and we won't be able to build anything.
See, I've switched off already, Jack. I can't listen to this.
Ground up sound. Ooh, yeah. Real estate deals. We lay them down. Let's get those deals. Deals making money, baby.
Welcome back. Episode 11 of the Ground Up podcast. We are one episode away from our 12 episode target. And in this episode, we're going through some amusing topics where the council rejects their own planning permission. Crypto trading desk opens up in London. We'll be going through our most profitable deals and our worst deals and questioning each other's trading businesses. There's going to be a lot of back and forth in this episode, diving into the nitty gritties of what we all do. And that is going to be most of the podcast. And we'll finish it off with one audience question. So I hope you enjoy and let's get into it. So someone put this, I don't know which one of you actually put this in the group chat, but this came into the group chat. I just thought it was really amusing. I haven't actually read anything about it, but I just thought it highlighted where bureaucracy is getting to in our planning system. And I know this happens sometimes. Anyway, I've heard stories in my areas where councils reject their own council's planning applications, but surely it highlights just an issue, like the biggest issue in the property sector at the moment. And this council, Spelthorne Borough Council, said its own planning application face the same scrutiny as everyone else's. Council rejects its own 250 grand planning application. Now, I don't see that. Like, I know the way they've tried to frame that is almost as if we treat everyone equally, but I just see that as you're an absolute waste of public money, and the bureaucracy is getting fucking ridiculous, and all of us just end up banging our heads against brick walls and wasting loads of time and money trying to go through planning, and the system's pretty broken. So, who was it who shared this?
Was it Jack?
I think it was me. I think I put it in the group chat because I was looking. Anyway, it came up. It popped up, and I screenshotted it and I put it in the chat because it just sums it up. Really, the council can't even get permission themselves.
Isn't it? It's fucking nuts.
It's just so difficult to get at the moment, isn't it? I mean, when you look at the planning applications of the UK, they're down. I was looking last night, so we're down 28% since 2018 on applications. And when you've got these small sites, I've got a small site which we're trying to get through at the moment, and every neighbour and their dog has wanted to complain. There are 38 complaints about 5 parking spaces are being lost because we actually own the land and there's overgrown shrubs that we want to put some access on. And when you think about it, you've got people who are turning up to planning committees and writing the complaints, living in houses. They'll all bang the drum and say we need more houses, but it's not in my backyard. You know, you can go anywhere else you want and build, but we'll all complain about it. And it's just so fucking frustrating.
I agree. I was reading some of the books of like how New York and London was built, and it was all started off as like either farmland or like marshy land and stuff like that. So everything is, but the problem we have is it's to be honest with you, like NIMBYism is a problem because every application we put forward, we have huge amounts of objections and complaints, mainly because we're in social housing as well. So it's like a double effect. People don't want developments as it is, and then when you say it's social housing, people really don't want that. What it still probably is the minority of people, but the majority don't speak out. There's no YIMBYs publicly coming forward, so to speak. And we've done sites all up to having over 1,000 objections on a site of, a small, basically what's a small site. So I think, though, to be honest with you, our experience, other than planning committee, but the planning system and officers, the problem really is that it is really bureaucratic to get a decision and is so much subjectiveness in the system, and everyone's opinions differ. The problem we see by far and large is the internal clashing between planning and highways and drainage and placemaking and ecology, and ultimately they need everyone to agree to go forward normally for the recommendation for approval. It's very rare that one of those still doesn't agree and they still take it forward for recommendation for approval. So
Yeah.
because you need that blanket consensus, and you have all of these different like silos with their own policies and no real incentive for them to approve it or not, you have a huge issue, which is exactly what it's the politics of it. And sometimes in some local authorities, there are some of those specialist consultees who actually take pride in holding up applications. And I know that might sound, if any like politician or local authority leader listen to this, they would disagree. But I am telling you, it is fact. It is absolute fact. We've witnessed it firsthand, and they are not trying to help you get this over the line. And that is just the way it is, and that's why it's so dragged out. And then on top of that, they are under resourced and underpaid. So you can't, if you have a planning officer job for 40 grand, but in the private sector they're on like 55 to 60. So why would you
But there's also people who know how to game the system. We've had 2 HMOs here on the same street, and nothing wrong with them. Full support from our planning officers. We've had a local objector request to speak, therefore dragging it into committee, and the local ward councillor, and they're dragging it into committee to speak at committee. Therefore, I've got to go to fucking committee for an 8-bed HMO. I'll go in there. They don't bother showing up.
I hate committees.
So it's pointless going to committee. And then the other HMO, that one then passed through at committee. The chair passed it through because it went to a tied vote. Chair overrided it and said, yeah, get planning approval. And then the other one, that literally the next week, the same thing happens, same objector goes to committee. I've got that committee in a couple of weeks, and I know they're not going to show up. They're just gaming it to get it into committee. It's such a broken system. It's infuriating.
We've got a project.
We're touching on two things here. There's like the process and the funding, which is one part, and how you actually go about planning. And then there's just the tribe mentality where you're never going to get everyone to agree. If you try and please everyone, you'll please no one. And it's difficult because one side is people have worked hard to buy a property, and then it might be compromised by what's going up next door or what's going over the road. But at the end of the day, if there's a cleaner and more routine process, because even if you threw all the money at the world, or these people that worked internally at the council and kept the same process, you would have the same issues. So there's two different things that need. So we've had plans like similar to Dorian. We actually had 340 objections on our social housing planning application for a 10-unit scheme in South London. And it was classic case of, it was like a high executive road. They didn't want it on their street. They wanted it elsewhere. And we beat them in committee. And that was a case of they didn't want it on their street. But now looking at a different scenario. So I live in an estate which has got about 60 houses and a block of 40 flats, all in one private estate. And basically, there's an argument that's been going on for since the houses were built about 50 years ago, whether the houses should be contributing to the communal open green space. And it's 50 years in, and they still haven't come to a conclusion. Because what happens is, it was originally drawn up on the title, then it then gets argued back and forth, year in, year out. People in the committee of the estate change and turn over. Then it comes back in again, and we're now in this argument. And I just say, I don't fucking care. It's like £100 a year. So I'm in a house, freehold house, and the flat owners are saying that they maintain the whole estate, and that the houses should be contributing too, because it is a private no through road estate. But the houses are saying, well, I bought a freehold house. Why should I pay a service charge when I own a freehold house? But the reason I'm bringing that up is because I don't think there's ever going to be an agreement on that, ever. Because the people in the houses are so stubborn, and the people in the flats are fed up for paying for the whole estate, which is quite a lot, because you've got, if you picture 60 houses and a block of 40 flats. The through road, you've got footpaths, you've got green areas, you've got this actually really nice walk through areas where they've built up loads of shrubbery and plant land, and all the kids play on the open field grass, which is quite a big area. It is a lot of space for 40 flats. So, it's been back and forth and back and forth. And when you have someone that's sitting in a 750 grand house and they're not willing to budge 100 quid a year, that is just the society of the world that we live in. And for me, I just couldn't be bothered with I would just pay it and just be like, I just don't want to speak about it, because they've tried to be like, oh, Jack's moved into the estate, he knows property, bring him in, he can look at all of the conveyancing documents from 1952.
You'd love
and I was just like, I can't be bothered to spend weeks on this, argue any of this, and fight it all. And I think that's just goes what to say, like, if you had the best process in the world with the best funding in the world, there will still be an element of that just mismatch.
This touches slightly on what we spoke about in the last podcast, and we'll move on to the next topic in a sec, but because this was meant to be a quick bit. But we did speak about in the last podcast that if we continuously have ever increasing laws and regulations, eventually everything will be illegal and we won't be able to build anything. So unless we have a detraction and put sunset clauses onto laws or regulations, then we're just going to ossify ourselves, where we're arguing about £100 annual payments for what's clearly a communal space. I mean, that shouldn't even be, that should just be why don't they all just get together and just go, guys, should we chip in on this? Like, should that be the right thing to do? And if not, the place is obviously going to degrade. And like, it's just, we need to empower people to make more autonomous decisions rather than let our legislation, our bureaucracy try and guide every facet of our life. Yeah. It's just too much shit. Yeah, we could bang on about planning for a long time, so let's move on from this, otherwise we're just going to fucking not stop. We'll go on to the next bit. Stu, take us away, mate. What's going on here?
Well, yeah, I mean, this is something that was put in last night. Obviously, Standard Chartered have created their Bitcoin and Ethereum ETN, I think it's called, which is an ETF in the US. They're a little bit behind the game, in my opinion. So it's great that London are now playing ball. I think the rules were that you have to be sort of high net worth or a sophisticated investor to get into these ETFs. They're not opened it up to the public as of yet. But effectively, let me just go to my notes so I can have a quick read off. So I listen to a podcast, a guy called James from Invest Answers, and I listen to him every day. He does like a 20-minute spiel on all the data. He's so data driven. He's from Wall Street, and he's sort of left that, and he's been into Bitcoin and cryptocurrencies. He actually does two separate parts. So if you just want to avoid all the crypto shit and all the altcoins and shit coins and just focus on the Bitcoin bit, which is where I normally focus my time, he takes the data. It's all real world data, so it's all off of the blockchain. But effectively, we're really quite behind the times. I think there's like 30 ETFs out there now. The first ETFs were announced in January, 11th of January. This year, and it now allows global institutions, investment funds, companies, sovereign wealth funds, oil companies, all to sort of allow to put their capital into the market. Where prior to 11th of January, it was only the private market where you'd have to invest your own money into the blockchain or into a wallet and sort of self-custody. The ETFs allow you just to literally make a call to your broker. So I want to buy 10 million, £1 billion, £500 million in the ETF, which is effectively 1 for 1. So for every dollar or every pound you put into an ETF, they have to physically hold the same amount of Bitcoin. It's all amazing signs for the industry. The ETF from the 11th of January till I think it was like the 4th of March. With it took 2 years for the gold ETF, which was the same thing. It took 2 years for them to hit 10 billion. I've actually got a chart, which I'll send over to you, Rye, to put up. Bitcoin ETF done it in 2 months. So to give you an idea of the growth of how much interest there is in institutions and wealth funds. And I've got another chart, which I want to show you, which shows you a triangle at the bottom where Bitcoin is effectively a fixed finite supply of scarcity. And the top part of the triangle is endless, infinite amount of cash, reserves, wealth, any value that we all know as humans has to fit into this little triangle. And the fact there's only a very small amount, there's like 2 million left of Bitcoin and 1.6 million Bitcoin left to mine. They reckon that if out of 21 million, £5 million is probably 5 million Bitcoin are probably lost when it was worthless because it was just transactions being sent around. You all hear about the hardware and you've got all the hardware that's been thrown into skips and into the land and hidden away forever. People trying to dig up the old what do you call it, hard drives and stuff. So if 5 million have lost and there's 1 million locked away in a wallet, which is there, which Satoshi had right at the start. I think it's like 1.04 million Bitcoin that's in a transparent box that's there to be hacked in plain sight for 15 years. It's never been touched. So it shows you how strong the network is. I think the ETFs are like basically the floodgates are now open. It allows any institution. You've got Saudi Arabia have moved away from their oil, the petrodollar. They've come away from their 50-year agreement with the US, where they were supporting them with security and guns and all the rest of it, and now they've decided not to renew that contract, so it allows them to sell their oil in any currency, whether they do the BRICS, which is owned by Russia, Brazil, China. They've all got together and built their own sort of currency effectively, which is there to fight the US. So if Saudi Arabia decide to price their oil in BRICS currency, then that will be a major blow to the US dollar. Or if they decide to go a bit left wing and decide to start doing things in Bitcoin, which is my punt, then you watch this thing go to £1 million a Bitcoin overnight. Literally, you'll wake up in the morning and it will just be like a flipping rocket that's gone. One of the big things about Bitcoin this year is that Michael Saylor, as we all know, I'm a big fan of Michael Saylor. I watch pretty much everything he does. And him and Michael Dell have been captured speaking. And that's quite important because Michael Dell, obviously, he's like a 60% shareholder of Dell Computers. I think he's worth about 105 billion. There was a post that Michael Saylor put out saying that Bitcoin is digital scarcity, and that was reposted by Michael Dell. And he actually then posted a picture of like a cookie monster chewing or gobbling up Bitcoin. And he's got like 700,000 followers. You're not going to play around as a billionaire. You're not going to play around people's emotions and start to rock the market. But what you are doing is subtly putting there to say, look, we are potentially in the game. And there was another picture of in Texas somewhere. You've got Elon Musk, you've got Michael Dell, and you've got Michael Saylor all working on some huge mining rig, which it looks like, these fans on top, which is a drone shot, which I've seen. You've got these fans on top of the size of like 4 houses. They're huge. So whether they're building some huge mining rig in the US, but effectively, if you've got people like Michael Dell getting on board, there is only X amount of Bitcoin. So I highly recommend that people start really taking this seriously, looking into it, because for years and years and years, I remember when in 2009, when the financial crisis hit, and I remember learning about fractional reserve banking, and I remember in 2009 having a cold sweat, thinking we're all screwed. Like there's nothing we can do now if our whole money system is backed against fiat. At the time, I didn't know what the difference between what fiat currency was and what other alternatives we had. And you sort of just put your head in the sand and go, well, I can't change it. I'm just going to get on and know that we all know we're being debased. We all know we're drowning in the money cycle that's being printed around us. And I remember watching Bitcoin in 2017 when it rocketed to 20,000. I thought, you stupid fools. Like all I heard was the media telling me that it was all, it's all for criminals and the black market, and it's just avoid it. It's just a complete Ponzi scheme. I remember watching this thing rocket to 20,000 over Christmas and then dropping. I thought, you silly fools. And then literally parked it, and my brain just closed it off and I moved on. And then 2021 happened, and then I looked again, and it caught my ear on some media I watched. It was like 46,000. I was like, bloody hell, what was it originally? And I looked at the graph, and the tipping point where this thing was going vertical is now a tiny little mound in the bottom left-hand corner as this thing is going again. And that's when I thought, I have to spend some time and learn what this bloody thing is. And then as soon as it's called orange pilled, which is what Michael Saylor's done to Larry Fink. Just quickly to end on this bit, Larry Fink is, he runs BlackRock. BlackRock are, they own 11 trillion pounds worth of assets. He's one of the most powerful men in the world. And he was orange pilled by a 20-something-year-old who works for him. And he managed to get some time with Larry Fink. Larry Fink saw the light, saw what Bitcoin was. And now they were one of the first ETFs to be announced on the 11th of January. I don't think they've sold a single Bitcoin. And since January to now, Bitcoin's tripled in value. Now, who's to say it won't come down 20, 30% before it goes up again another 200, 300%. But, you've got it's just insane. Like, I mean, the floodgates are open. ETFs allow people to get in. And I'm hoping the quicker that London can catch up and become a global player, then the more money and more capital we'll be able to put into Bitcoin and have some standing on the global stage, where this is, it's an undeniable force that's going to become more powerful. And I highly recommend anyone watching this just to spend a bit of time watching Bitcoin. But I'll put the charts up with you, Rye, so you can put them up on the pod.
Nice. Well, there's this bit as well, right?
The holdings. Oh yeah, so this is what's going on. So with this money that's been kept by companies is money that they've extracted by countries has been extracted by bad players. So what they didn't tell you in 2012 to 2014, where the black market was using it to buy drugs and stuff on Silk Valley or Silk Road, whatever it was called, is it's totally transparent. It's totally trackable. So you can see every Bitcoin that's ever been produced and where it's gone into every wallet. So forever, you can see any money. If someone steals some Bitcoin from you, you can watch that Bitcoin move around for 20 years. And at some point, someone will off ramp it, put it into some currency or change it, and then you'll be able to locate that wallet with that person and arrest them, and then effectively take their Bitcoin if they'll give you the passwords, or they'll give them a lower sentence if they extract their Bitcoin, which is what most of the criminals do. And then the government own the Bitcoin, and they're not actually selling the Bitcoin; they're holding it, which is what these numbers are from. Not the government; the countries haven't been buying it. But you got Germany this year, this week, they've basically tried to sell. I can't remember the number, but they've sold loads. They just put it on the stock market on the on the spot price, put it onto the exchanges, and the price has dropped 5-6% because as people start selling, the price is quite vulnerable, so it will come down in value. Where they could have sold it off market and sold it to the exchanges and kept the price the same. So they have no idea what they're doing. But the United States is like one of the biggest suppliers, biggest holders in the world. China closely behind them. It's good to know that we've got some Bitcoin, but we're still way off the mark, really. And the fact that they're putting a strain on British citizens being able to buy Bitcoin, until literally like 2 weeks ago, they put a massive clamp down and said you can only buy a maximum of £2,000 worth of Bitcoin per week. Where when I was buying some, I could buy 5 or 10 grand or 500 quid, buying smaller chunks. But the government was so worried about the bleed of money coming out of our economy and been put into the Bitcoin network, that they've actually stopped. They've actually broken that rule now. I don't know, because we've got the ETF in place now, and we've got all ETNs, and we can now start becoming more of a crypto positive country. But it's an undeniable force, and I think the quicker we get on as citizens and start understanding what it is, we won't get left behind. Which is
just to add on that, only for the people listening, in terms of layman's terms, ETF and ETN. So you're just a very quick definition, but you could probably explain it better, Stu, just for those listening that have never heard of that before, because it's like these acronyms can maybe confuse people. So ETF, exchange traded fund.
Yeah.
So it's a type of investment fund that holds a collection of assets like stocks, bonds, or commodities, or like things like Bitcoin or crypto, and it trades on the stock exchange like individual company stocks, and people can buy and sell them throughout the trading day at whatever market price dictates. Yeah, so that's ETF. Yep. Then the ETN, exchange traded note, which is an unsecured debt facility issued by an institution and is also traded on the stock exchange. And their value is linked to the performance of a specific asset. Yep. However, they do not own the assets they track. So why would you invest in an ETN over an ETF?
As far as I was concerned, they're the same sort of thing. Effectively, it's just a note is a promise, and the fund is a physical commodity. So yeah, I would always the note is basically a promise, and the ETF is the fund. So they have to hold one for one. So if you're going to invest in one, you'd normally invest in an ETF, because they have to hold the same amount, the equivalent. So BlackRock, what they were doing is they were buying in huge commodities prior to the ETF being announced, because they've had like out of 500 ETFs approved over. They have one not approved over 500. So the odds of them getting this Bitcoin ETF was almost inevitable. But they were buying a load of Bitcoin on the hype up to getting the ETF approved, and then they opened up to their market. They would then have all their guys on Wall Street selling this product, try and get all the hype in, because they make money on. They make like 0.25% on every transaction. So they're making a small amount, but over millions of transactions. But effectively, when the market drops, BlackRock don't have to sell their stock; they can sell it to themselves. So they haven't actually sold any BTC. So as people get nervous and sell their product as the market drops, there's no inflows going back, or there's no outflows going out of their ETF back into the circulation. They're holding it, and they've basically got their own stockpile inside BlackRock, and they're using BlackRock and their profits to buy more into their own ETF. So this whole thing is compounding.
Because it's a note, a debt note. Do they get more of a guaranteed return or a fixed return over an ETF, which gets the full benefit of the up and down of the market? Because I was just like, if I invest in a note, kind of like a bond or something, paying for a bond of which is giving me a specified return over a period of time, and I can sell that bond, for a premium or a discount depending on what the market does. Whereas an ETF is purely I'm investing in that fund.
You're best in the spot. Yeah, I don't think it pays a return. But
Right.
I did find out that, because Bitcoin, that's the one thing about it, is that if I go to the 5 principles of what Bitcoin is, so the 5 circuses that we all seek for money is divisibility. So it can be divided into smaller units. The recognizability, so everyone recognizes it's got a value around the world, and it's a global currency, effectively, that's not owned by any state or government or board. Durability, so it's not going to corrode over time. It's not going to be diluted like every fiat we've ever known. It's portable. It can move across space and time, effortless or fraction free, and it's scarcity, which is the most important bit that outstrips demand. The one thing it does miss is it doesn't pay a yield. So you've got all these other cryptocurrencies like ETH and stuff that basically have a inflationary mechanism that allows them to create a yield, so it creates a value for people to hold. So the one thing that's missing from the ETFs is it creates a yield like a bond and stock, which is what we're built into realizing we've got to try and make a yield. But in a deflationary market, you don't need a yield to be created if things are coming down in value. So if there's more stuff that is pegged to Bitcoin, the Bitcoin value decrease. So the Bitcoin value increases over time. So it's a deflationary world. How to explain this? There's a picture we've got. It shows the house in 1954. It was like, where was it? Let me bring it up on my phone so we can get it right.
Is Bitcoin moving up in price relative to other commodities, assets, products, services? So it's fundamentally Bitcoin's repricing our world of trade and our economy.
Yeah, so in 2016, there was $288,000 for a house. It was 664 Bitcoin. In 2024, 434. So the house price has doubled over that period of time, and yet the amount of Bitcoin required to buy that house is 100 times less. Yeah, 100 times less. So that is what's happening. Is everything in our ecosystem, you should need less money to buy more stuff over time, and that's what Bitcoin does. It's a complete different way. If you price everything in Bitcoin, then everything is getting cheaper: housing, fuel. But in currency, in your own local fiat, things increase in value. It's a real hard thing to even explain on a podcast, until you just invest yourself. There'll be a trigger point when you learn and you go, "Oh my god!" Like we all know in broad daylight that everything's going up in price. It's
In that sense, in the way it's repricing as like a global reserve asset, it's doing the same thing that gold did, really. When we went from trading, beads and tea and clothing and fabrics and things like that, and then we've moved on to this gold standard, and it followed those same 5 principles. And gold, the problem with gold is it's hard to be the custodian of, and because it's expensive to secure, expensive to move. But gold did the same thing, but it happened over hundreds and hundreds of years. But Bitcoin's coming in and doing it very, very quickly, which I think is scaring a lot of people and a lot of institutions, and it's creating this volatility, and people don't really understand it. And which moves on to the next bit. Now that we're seeing these ETFs and ETNs getting approved in the UK, and we're phenomenally behind the times usually, will we be able to get mortgages in Bitcoin anytime soon? Like, I think that's when we'll start to really care about it in our trading businesses. Can we actually start using Bitcoin as a debt instrument? Will there be a bank or a first mover that will allow us to start borrowing in Bitcoin? I think that would be
I've actually found out a few days ago that I'm waiting for banks like literally Barclays and HSBC to actually want to borrow, because if you lose faith in your fiat, then we have to turn to something. It'll be very volatile, and I'm not hoping it happens overnight, because even though people who own Bitcoin will be very wealthy very fast, it'll actually destroy the whole economy as we know it. But effectively what will happen is, rather than creating a yield, you'll be able to borrow against your own Bitcoin. So there's a I don't want to mention the name. There's a product out there where you can basically lend your Bitcoin into an almost like an online escrow, so you still have some control, and then you can borrow money against it. And then as the Bitcoin value goes up over time, effectively you use the last time you refinanced against it, it's then 10x'd in price. You can then refinance it again, and that's how you'll create your yield. It's like an internal mechanism. But if you just play out our local currency over the next 20 years, we're all at an age now where we've seen the last 20 years of what's happened to the basement of currency. Just look 20 years out and think about how much everything's going to cost. And you must be thinking, this is totally unsustainable, because this curve's getting quicker and quicker and quicker. And there will be a breaking point. And whether it's in 2 years, 5 years, 10 years, 20 years, it's just not sustainable the way
I don't know. Inflation has just reached 2% apparently, Stu.
Yeah, of course it has. Of course it has. Yeah, and we're
manipulated
seeing that
basket of goods.
in everything.
Yeah.
It's still going up, but 2%. So it still means the half price of that anything we're looking at is 50 years. So everything in 100 years goes to zero. Even at 2%, which is a made up number we should all feel good about, but things are still inflating at 2%, which why should things be going up? It should be coming down in value because technology and the way that we run as society, we're more efficient than we've ever been. Why is things are still going up? It's just madness. There was a real good video which Sailor done. It was called it was called 21 Rules of Bitcoin. It was in June this year, and 8-9 days ago since we recorded this podcast. And he'll just take you through 40 minutes of the 21 rules that what he sees, and he's so good. He's so
I did watch it.
Did you watch it? What do you think?
I did watch it. So I understood the rules, but I tell you, and this right. So I watched it, and I watched it with an open mind, and I understood the rules and stuff. But he was just coming across a bit too cultish, and that maybe just be me. But
because do you know why? Because he's done 5 years or 4 years now of doing the basic videos. He has to become new and become creative and try and talk in a different language. So what he's doing now is he's talking with a lot more conviction and a lot more like this is where it's going, because he's already done all the basics and he's been vulnerable and he's been open-minded and he's taken it with a real soft edge. So I highly recommend you watch the early stuff and then see where it's going, because he's got so much conviction now. It's the
Dorian, you watched the series before you knew how the story was created, basically.
Yeah, you watched the ending.
Yeah, because he was saying on there, like, about you should put all of your assets basically into
everything you own,
everything,
which I totally agree you should. And I'm literally 99% in Bitcoin.
I think it's important to stress that like any revolutionary technology or societal change always starts off very culty. And we're seeing that in our politics in the UK at the moment. When you look at the Reform Party, and it feels like a bit culty, but that's because for big change to happen, or for a big disruptor or some technological force to really take over, it needs a real conviction from individuals that push that technology and that push that message forwards. And then eventually it becomes ubiquitous, and we all just go, oh fuck yeah, we are all using social media.
Because it was like a live event. He was like saying a rule and saying like a big statement, like have all your asses in Bitcoin, and the whole crowd would like rally around him. And I was just thinking to myself, okay, now this is
it's a bit American. There's a bit of an Americanized tank.
One thing that
WWE fucking WrestleMania match or something.
One thing that I found interesting is, when I'm probably a little bit more simplistic, so I'd rather be, we talk about first movers in markets. I'd rather be a follower of a first mover, and the way that I would do that is follow a billionaire that's become a billionaire before Bitcoin, and when they've then shifted to become a billionaire, for example, also, or moving their wealth into Bitcoin. And if you look at the Forbes top 20 billionaires in Bitcoin, not one of them has made their money in anything else other than Bitcoin.
No, that's not true. Sailor was a billionaire before.
What did he do?
Sailor was a billionaire before. He runs MicroStrategy.
It's a
I've got
tech
a list of
solution
the top 20
cybersecurity
somewhere.
system.
Surely that's in.
He has become more and more wealthy, but no, he's basically
he's 5x his value.
What is MicroStrategy though?
So MicroStrategy is a software solution provider for cybersecurity systems and other technology solutions for enterprise customers, similar to Larry Ellison's Oracle, but much smaller market cap. But they're very liquid, and he needed to find a treasury asset for his business. And it's a fascinating story how he got into Bitcoin, because he didn't care about Bitcoin or the fundamentals or anything. He was just like, I want to protect the reserves for my business, and then ran all the analysis and became obvious.
There's another spreadsheet which I need to find desperately on here, but it'll take you the top 25 Bitcoin holders, and you look through that list, and you've got everyone from Tim Cook, you've got Elon Musk, you've got so many big boys that are all into it, and they're into it for hundreds of millions of pounds now. But it's all done off record. It's not done through the media. It's done through people talking about these stories, going, my God. And Dorian's point, I was so worried about joining some cult and being brainwashed. But then when I've watched these big players who have already made them billions, and they're now so heavily into it, but they're all keeping quiet. They're literally buying like whales so much. It's cheap.
Still, I think Jack's sentiment is right, though. It is the exact thing that convinced me. When I saw Michael Saylor, I didn't know who he was until I saw this old guy talking about Bitcoin. Then I learned more about him, and I went, well, this guy knows his shit and he's made loads of money. And then
Me
I heard
too.
about Elon buying it, and then these other billionaires, and that was all the conviction I needed. These guys are smarter than me.
Yeah,
And
me too. I was like, follow
they're
the
talking
big
about
money.
For example, what percentage of Elon Musk's net worth is in Bitcoin?
Well,
yeah.
1% is what they all aim for, but it starts at 1% while you get into 1%,
You
then
just
you go to
said put
5%.
all of your money into it.
Yeah, but
which
they
is
are. They are
100%.
literally. Yeah, they are.
Yeah,
You start with
market strategy
1%.
is.
You get your. They're putting they're borrowing money in fiat. So the reason why I got into property as well, which is another reason why we're talking about this, is that when I learned about this in 2020, it made so much sense to me to take money in the fiat system, which I know is being debased, get myself exposed to as much debt in the fiat system as possible, buy a property like a HMO, convert, make it positive cash flow. So the debt is being serviced by tenants. The positive cash flow, whether it's £100 or £1,000, take that proportion, which I didn't need to rely on as a salary, and buy Bitcoin with it. And in the other world, I'm buying Bitcoin on a dollar cost average over time. So as the price increases over time, I'm making money, which is taxable at the moment, which is why you need to borrow it in the Bitcoin world and not take it out as debt like we do in this world. So I'm winning on both sides. And that's what they're doing. And now he's actually actively promoting that because he's got the confidence and the conviction in the Bitcoin network. He's like, right, borrow as much money as you can in the fiat, either through an operating company or through property. Lever yourself up in this debt, which is almost mathematical certain to be debased because the system just completely breaks down if they don't print more money, because that's the way that it's been built. And then buy yourself something, buy yourself the hardest asset that humans have ever known by understanding the principles of what money should be and what Bitcoin does for the money system, and buy that, and you're winning on both sides. And that's how the 21st century and our age group will become wealthy. That is the new money that's being created in this new environment.
It'll be the biggest wealth transfer in history.
Oh, it's without a doubt.
The Bitcoin transition will be the biggest wealth transfer ever. And
Without a
anyone
doubt.
who's exposed.
What I
am
do love about
wondering-
Bitcoin, what I do love about Bitcoin is it's a bit like veganism. Like there's the majority that are like kind of like, you know, some are open minded, some are closed minded. I'd like to think I'm fairly open minded and did get involved pretty early when it, you know, 10 years ago. And then there's the minority who are so converted. It's all they want to talk about, and it does come across quite culty. And this is just from an outsider's perspective in.
Yeah.
And I think that's quite natural. But to finish on a light note, and Ryan was talking about commodities and what we used to trade. I've got my two favourite commodities that you can trade. And the first one is something that's still traded today in the world, which is camels. I like that's treated as a commodity. It's a known phrase that you can swap camels for wives in certain parts of the world, which is a fun one. And a second fun story I've got for you guys is the actual terminology of a shot, like a shot of whiskey, came around because back in the day, a bullet shot was the same value as a shot of whiskey. And that's how in cowboy era, they used to trade to pay for a shot. So that when they would sell a shot of whiskey, it meant a shot bullet.
That's cool.
That they would trade over the counter in the what do you call them? The swinging door
taverns.
taverns.
The saloons.
Well, so those taverns became like armories.
Well, they could trade in. That was
their local commodity. That was a local system at the time.
Everyone had guns, everyone had ammunition, and sometimes you traded for a bit of whiskey.
Back in the day, they used to deal in salt, didn't they, as well? So, salt was a very valuable commodity back in the day because of
we've used everything.
And stuff.
We've played around and tested with all these different commodities, and that's a great one. That is.
And then pre that, it was always all about bartering, wasn't it? Humans love a bit of bartering. I need a new rock for my cave. Well, I'll give you this. I'll give you this skin from this
brand new rock
animal I just killed.
Yeah, brand new rock. Trade
you this skin for that rock.
One female owner, great condition.
And now we're fast forward to this day and age where we can't get planning permission. So
yeah, exactly that.
Sorry, bringing it back to planning.
Let's shoot on to we'll shoot on to the next topic. But that was a nice brief section on Bitcoin. But it is pressing, and we do have these elections coming up where we've got political leaders talking about it. So it is on topic for us to try and stir some convo about Bitcoin. But for now, we're going to talk about ourselves. So what we've done as a quad is put down some stats about our business, just some high level shit, and we're going to go through those stats and question each other on bits. So we'll start with the number of trading vehicles and then go around each and then just question each other on these trading vehicles, anything that comes up. So let's start with Jack. Jack, you got the most trading vehicles. Go on, hit us with them.
Yeah, so I actually put on there 7, but it's actually 6. Miscounted. I believe it's 6.
As you do.
So starting off at XP Property, which is my property development business, that is treated as a trading entity. It's in a group of about, I believe, 13 or 14 companies. I'm sure we'll come on to this. But those are special purchase vehicles which you set up for limited liability and to ring fence each project with a private investor or without a private investor. So its own bank account, its own shareholders agreement, but they're all eventually owned by the top co, which is XP Property. So that's one of the trading entities, and we're just a development business. XP Surveys, which is our measured surveying and topographical surveying business, that's independent. That's not owned by any other entities. That's owned by myself and Ben independently. Central Suites and that group below that, which is another group of companies, which is our HMO portfolio building lettings business, which also manages some of XP Properties. Our social business, which is called Apara Social, we're co-founder and co-shareholder in that business. Again, that's a group of another 10 companies, and that is a social housing portfolio. Jiggens Property, which is a company I set up with my dad, because some deals, as we were growing in XP Property, I found really difficult to sell to investors that didn't sort of know the area and want to take risk. Whereas my dad, he one of the sites we bought was behind his local pub. The other one was right next to the other site. So he understood the value, and we've bought a few assets in that business. And then last but not least, which is my group co, which is called Jiggens Estates, which basically invest back down into all the groups when necessary, when where I choose to. So it sits at the top, and it's more of an investment vehicle than anything else. But that's the 6.
Nice. All right. So what's your favourite one? No, I won't ask you that. That's going to start getting us into some.
I got
sticky
asked
information.
this. Yeah, I got asked this on a podcast. I feel that every business, I mean, of late, because the market has moved the most in the social business that we own, yields have drifted 2%, and that's like 6 million quid worth of value. So that hurt the most, and is probably my least favorite at the moment. But out of all of the others, they're all learning. I like learning. I like challenge. I like building teams. I like building assets. I like adding value, and you can do that in any business. So, I a cop out answer. I like them all the same because
All
they
right.
all
Which one's the
produce.
hardest then? Which one's like the hardest operationally?
Definitely the social business has been. It's been super difficult. It's been, our non-exec advisor says to us that a fast growing business is like driving a fast car. All your problems approach you quicker. And that business scaled 5 times the size as quick as my other HMO business. And guess what? That's 5 times the problems, 5 times the cash flow issues, 5 times the amount of value in cash flow. The external market impacts you more. So when that drops 10%, that 10% is larger because your portfolio is growing quicker. So that has been the most challenging for sure. And I actually said when we won the award, it's been a high off, dozens and dozens of lows. And that's sometimes the nature of entrepreneurialism, but other businesses are easier to make twists and changes. So that's definitely been the most challenging to get to where we are today and to stabilize that.
How if you were to plot it on a timeline, from when you started in property, like properly started in property and went, right, I'm going to set up a company and actually like go for this. So not just like the first couple projects you did, but you incorporated. What was the timeline of like the first business and then the next ones that you then folded in?
Yeah, so Jiggens Property was the first. That's approaching 10 years old. And that was individual house flips or delivering. We actually did some like loft conversions, garage conversions, little bits of construction work. XP Property and Central Suites was born about 7.5, 8 years ago. Off the back of that, we set up Aparo only 3.5 years ago. So that's grown from a 0 to a £22 million portfolio in 3.5 years. So you can see that trajectory and scale. XP Surveys is only 3.5 years old. and Jiggens Estates is about 3 years old from when we restructured the group, and I then set up my own investment vehicle at the top. So 10 years for one, then 2 more in 8 years, and then the last, I suppose 3 or 4 were in the last 3.5 years.
What would you do differently if you could have gone back and like restructured the actual inception of those different businesses? Would you have started with one earlier than the others, or?
I think we would have probably grown the social business slower, because the market did move and it caught us at a bad time. We had grown so quickly that it was almost, that was technically a side hustle, that business. To scale 22 million in 3 years isn't a side hustle. That requires a lot of attention and learnings and navigating a way forward. So we'll probably do that slower. We've talked before about building cash flow and then building assets. Building cash flow first, and I would have loved to have set up XP Surveys sooner to support that growth and that cash flow. But it's difficult to say you'd do anything differently, because probably like you guys, you didn't know what you didn't know. And I sometimes, I watched back a first video that I ever put out on Facebook. I sometimes, to sort of humble me and look at how things have moved on and adapted in my businesses, watch back videos from before. And that's why I love that's one of the main reasons I actually love producing content, because I like looking back and thinking, cool, that was only 3 years ago. And I don't know, I don't look like I know what I thought I knew 3 years ago. If that makes sense.
It's super weird. I'm sure that's something I guess we all have experienced, where you look at yourself or you think of yourself 2 years ago and go, you knew nothing. Like, how did you get anything done?
I hate watching myself back, because I'm like that, but I'm also hypercritical of myself. I start listening to myself back, and then I'll just stop it. I'm like, what a fucking idiot! I never
rewatch myself back. And just on Jack's point there, I went back to find a photo the other day, and I went right back to the start of my Instagram reel, which is the reason why I got into Instagram. I wanted to keep a digital log of everything, and I saw a picture back from like 3.5 years ago of just this chimney sitting in a room, which was our first HMO, which we took, which actually the guy ripping it all out took a picture into his photography. And I just literally had this whole wash all the way back to that point when I saw that photo for the first time. I thought, fuck yeah, now what a journey the last 3.5 years has been. I know, to look forward now to what we're doing now versus then, there's no way in hell I'd have ever put myself on the sort of sites we're now working on, which we feel in control and we're steaming through. But yeah, 3.5, 4 years ago, it's just a complete game changer. But that's what hard work and commitment does, isn't it? You just keep learning.
It is weird. And I know, Jack, you said obviously in hindsight's great, isn't it? But the benefit of you knowing what you do know now is that you can hypothetically look back and go, how would I have restructured things? Like, I know for me personally, I would have done the sourcing and acquisitions for investors earlier, even though I suppose we did do it quite early. But I mean, probably a year before would have been a bit nicer, helped us through some of the hard times. So you're saying XP Surveys, if you were to grab one and nudge that back down the timelines, that's the one you would have done it with.
And I would also say that we would have started on bigger deals in XP Property sooner. I think we were probably Ben and I had the right to be more confident in construction than we actually were. Ben was technical delivery manager at the Berkeley Group, and I've born on a building site, so the amount of resource around me that I can lean on when I need it. We're doing fixed price contract with the main contractor anyway. So we didn't grow as quickly as we should have been, because we were doing a lot of small deals rather than less of a lot of larger deals. In 2019 we did, to put that in perspective, in 2019 we did 12 deals end to end. So bought, built, delivered, and sort of turned around a site. And now we're in 2024. And we're delivering 5 sites to the tune of 40 million quid. And in 2019, we delivered about 10 million in delivery. So we were working so hard. Imagine the amount of capital raising, debt raising, drawdowns, buying, legals, conveyancing, managing, all of that for 11 to 12 sites is literally mental. And I'm not talking houses and HMOs. I'm talking developments, planning applications, building control, contractors. All of that work it was just, we were just running around like, and that was just me and Ben. Then we were just running around like headless chickens, and working our ass off and not seeing a lot of value for that. And then we started hiring a team, and then we were like, to pay for the team, we need to do bigger deals. But we were fully capable of doing what we're doing today because we had already been part of that in our professional lives.
I think there's maybe one upside though to doing a lot of volume at smaller transactions is you're going to learn nuances a lot quicker, right? Like you'll learn pitfalls and processes, and you get a lot of like feedback, even though you might make a lot of money. Yeah,
completely agree. We built out systems, we built out processes, we built out documents. I learned how to capital raise with 100 grand, and now we're doing, 2 million quid. So you do cut your teeth, but I think I'd only caveat that with that. There's a lot of people I see out there that were, they run a business of, let's say car dealing, and now they want to go into property. They don't know anything about construction. So there is merit in them starting a little, at their capabilities. But we started way before our capabilities because we were probably a little bit nervous around the business side of things, if that makes sense. Not necessarily just the construction.
Hiring staff, all that kind of stuff, and you kind of get all responsibilities and shit. Yeah. What about you, Big D? Trading businesses?
So I don't have. In terms of my career, I've gone through a lot of trading businesses. I had a letting agency, estate agency, a finance brokerage, a brief stint of an accountancy practice, which was anyway, and then imported from China and did online retailing. So I've had a lot of businesses, but nothing really. That was probably more in the era of me just trying to learn a lot, not giving away leads, so to speak, and trying to keep control of everything. I wanted to drink the ocean, and then obviously went into private developing, and then got out of that because the market turned against me, as well as there was a bigger opportunity in this kind of social and affordable space. So my business is, the main one I have is a social and affordable partnerships company, house building company. That's the main one, the biggest one. And then I also have which is effectively a separate business, a groundworks company that feeds from that main company, because groundworks equates to because everything we do is we're predominantly new build. 95% of what we do is new build, and in new build, especially in brownfield new build sites, you take so much risk in the ground, and it can be so expensive, and is about 25% of a project value. Typically, groundworks is. So a £5 million deal, at 1 to 1.2 million might relate to groundworks in new build house building. So we were just taking so much risk. So set up a groundworks company, and that is quite challenging because it is not as straightforward as like house building is effective. It's quite a straightforward business model that you forward. Well, in our case, we forward sell. We get the criteria, we find the opportunity, we forward sell, we get funding, and we subcontract. We split all the packages down and manage it. Now, obviously, it's easier said than done. There's like 1,000 things that could go wrong, and they typically do, and so many things you have to do right. But ultimately, that's the model. With groundworks, it's a bit difficult because you have a lot more direct labor, and you are literally doing the work as well. So we have that. So that's the groundworks company, and then the third one is kind of like the investment vehicle. So I have a portfolio mixture of residential, semi-commercial, commercial, and just stuff like that. But I haven't really been doing any buying. In fact, I've been doing selling though of the portfolio. I don't really want to hold a big portfolio anymore. I don't really want I see the value and the wealth and stuff coming from a trading business where my eventual goal is to ideally float the company and give benefit to the employees as well with share options and all that sort of stuff. And then instead of selling my shares, as Stuart mentioned with Bitcoin, is leveraging my shares, and so I don't have to sell the ownership, and then take that money, which is tax-free money, and put that into the next round of businesses and investments, blah, 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 and then benefit also as the business gets better and better and better and the shares go up, because with shares, you can leverage against them that's what most of the very wealthy or owners with public companies do. And which is what Stuart mentioned, you should be able to do soon with Bitcoin as well. But that's really what I'm doing in the plan. And then I have a couple of other seedling / startups at the moment that I'm involved with. But at the moment, those are the three main businesses.
And can I ask a bit more, Len, because obviously your main focus is Castell. you've got these different departments within it, which have their different sort of operational procedures. Can you just break them down into like those departments? And then as a caveat to that, do you look at a like return on investment based on the departments? Like you've got a technical team that do all your designs and stuff, but why not just outsource that to an architectural practice and just not have that on your books and not have to worry about it?
Sure. So yeah, we have so starting from we're land led. All of the deals we've done have been from land we've originated. We've not done any tender deals, or even though we're on frameworks that we're not like a traditional contractor. So we have a land team, and their job is specifically to build a high quality pipeline from our clients' criteria. Land is extremely hard, especially in Wales, and it requires years of investment and millions of pounds. So luckily that I managed to secure that, but otherwise it wouldn't have been possible. So we have the land team, and their criteria is all about pipeline, new leads, and the value of those leads basically. Then I have a technical team which get involved at pre-construction and follow it all the way through to construction and post-construction. And that technical team is absolutely vital to most of the work for construction, and most of the errors and most of the money gets made at pre-construction stage. It doesn't necessarily get made at construction stage. It can get lost at construction stage, but the better you buy the site for and secure the terms, and the more that has been invested pre-construction, streamlined designs, value engineering, actual buildable drawings, all that sort of stuff. When you get to site, things go a lot smoother, but all of the money's been made at that stage. You've now just got to deliver on that. But once you're at construction, it's too late at that time normally to make big changes that will result in savings. And then if it's complex and the technical team haven't ironed it out, you'll just be on stop. It'll take a lot longer and it'll cost a lot more, etc., etc. So they get kind of KPI'd against avoidable errors that have happened on site that are related from a technical or design perspective. So we're tracking what's come up as every month across all of our sites. So we're managing 10 live sites at the moment. Every month we have lessons learned and delays, and we track the origin of those delays, not for blame, but for accountability and to understand where the failure of the process is, and then to hopefully go back to whatever process technical are doing, and on a DTM design team meeting checklist, when they next do the architect drawing review, that issue that's come up on the site today that could have been avoided is now added onto that checklist. So the next site that they're reviewing those drawings on, when they're going for the checklist, that question's come back up. Has this been checked, type of thing, and then hopefully it will. But it's a learning process. And then we have a commercial team, and they are also involved at estimating a pre-construction and land opportunity, all the way through to procurement, negotiating, contract administration, and then just ongoing commercial management, basically, and Val's internal and external and cash flows. Commercials are obviously worth its weight in gold. They all are. Then we have construction, and they're all about delivery, actually building the thing. So construction programming, getting involved early with risks, and helping on ideas for buildability, and then delivering, which we track quality, health and safety, program performance, and again also avoidable errors from a construction and avoidable costs from a construction point of view. Then we have a finance team, and they manage obviously all the money in and out. And we have a marketing team, and we have office/HR manager, and that also does our customer care, which eventually we'll need somebody for customer care because we look after the project for the first year afterwards. So if we're handing over 300 homes a year, that's actually, we obviously want to hand over with as minimal defects as possible. But when people start moving in, only then you really see these bits that come up, and that takes time. If you've probably seen it with your portfolio, range and maintenance to do a job takes so much time for a little job. Having 20 of those literally will take up someone's entire time. It costs so much money to deal with them. And then we have the groundworks division, so that's separate. And then there's myself.
And do you track, just out of interest, do you track these? Because it's kind of like they're different businesses within the same business. I know it's a streamlined, pipeline of operation, but do you track the individual department's performance fiscally? So, i.e., you got your land-led guys, and you're then securing the site and then forward selling it to the RP. Do you kind of ring fence the return on investment on the overheads that are required to fulfill those operations compared to the upside on the sales, and then same for the construction, same for the groundworks? Do you track them individually?
So groundworks, yes. Construction, yes. Land is a bit difficult in this sector because the social and affordable sector is quite complex. It's not actually clean cut. It's a package deal, so it's a land and a build deal, and money's kind of in both elements of it. So like we technically, from a land point of view, we've done deals that have a land loss because the way they get valued sometimes. But then that gets subsidized from the construction side. So we look at it overall, because the overall project has to make its return. The land team on every project we have, there's a fixed sum that we have in the appraisal to cover the cost. We know what our annual cost is for running our pre-con and land division. Every job has a lump sum in the appraisal, because we know we should be starting 6 or 7 new sites a year. So we know what our overhead is for that division. So we take that, divided by 6 or divided by 7, depending on what, and then we add that as the appraisal. So when a deal comes through, it has that lump sum in there. We know that that's covered. Does that make sense?
Yeah.
And then we have the the construction overhead as well. But we don't. All of our deals have the margin we work on is like a gross margin / contribution, and we just have an overhead to revenue ratio that we shouldn't go over. And so in short, every division has very clear metrics and objectives, and they know what they're going to be doing, and they have a reporting structure and deadlines. Then from an individual deal basis, we have clear metrics as to know what things cost us in terms of pre-con team overhead, construction overhead, and that's how we make sure that it's viable for us to proceed with it.
And would you ever, with these kind of departments that you're creating, as you get more and more scale, would you ever look at offering those services externally? So not just to your internal pipeline, but would you, sub out your internal technical team or whoever to third parties?
The problem with that is that what we found, if we were smaller and we didn't have as much workflow come in, the answer would be yes. But the bigger you get and the more deals you have, the more dedication you need. When you sub out, you are one client of X, and it's okay for smaller companies or companies that only have X amount of, like, for example, we're not in the tender space, but when a tender opportunity comes up, we'll still price it internally, but we'll then work with a professional like bid writing company that we don't employ, we subcontract to, because we don't do them that often. So it's not worth us bringing it in house. Whereas we've got so much of a land pipeline and leads come through that anything related to that we need full control on and dedication on. Does that make sense?
Yeah. Just because you're building up, such a slick operation, especially in like the construction side. I just wonder, if someone came to you with their own development and needed construction services and you could make a margin on it, like, would that not be a good way to diversify? I know there's distractions with that, but with scale, middle management teams, you could facilitate it. Is it something you would do?
No, not really. It goes away from our core business of what we're trying to do. We don't want to be a contractor. We want to be a partnerships company, and that's really what the business model is all about.
Yeah, got you, mate. All right, Stu, what are you saying?
Yeah, mate. Let's bring up my bits. So I run effectively 4 different segments. Obviously, loft conversions is our core business that we started, which gave us the fundamental infrastructure to go on to other stuff. SW Homes is effectively our holding company, which holds assets I own 100% of and shares in my third business, which is Wyeth Properties, which is almost like a partnership level. So I have invested some time and energy with one of my good friends who's basically a build director who sits on individual sites, and that company goes into SPV partnerships with our investors where we buy assets together, we'll develop them out and then either hold them or sell them. Our target, our our goal to date was to hold everything, but we are looking at whether we sell some stuff, release some cash, so we're not living so close to the line all the time as we're running through life, to give ourselves a bit of flexibility, sell a few and maybe do a few, just myself and my business partner. And then the last business, which I set up only at the beginning of this year, was a very small consultancy type business where we get quite a lot of inquiries from Instagram of people just wanting a few hours of my time to sort of run through their business plans or to get a bit of help in certain areas. And we'll spend sort of 3 hours on Zoom calls together. And then as part of that deal, we'll meet for lunch on one of our sites that's either live or that we've completed based on their strategy, and have a few hours together and have some lunch. And I really enjoy that because I see people who are only super motivated and want to do well, spend a little bit of money with myself. We'll sit and get to know each other. I've done that like 7 or 8 times now. And yeah, it's fantastic feedback. People have gone off and actually bought properties that I would have whipped the hand off and bought with them if I was in that potential area. So I just basically pass on my sort of key nuggets of what I look for and how we sort of appraise sites and fag packet, high level stuff, working backwards, and then what sort of documents we use to price things. And that's an ongoing document. So every time we learn something about rights to light or different type of insurance we need, we're adding it constantly to this document to really sort of iron out the whole development process. And then our job will be to just to find the same sort of site wherever we are in the home counties and just put it on our machine and spit out the flats to a same level. So they all are a bit cohesive. They all work together. Our operational team, which is under quite a lot of stress because we're still doing we're going to end on about 75 lofts this year, which is still quite a big operational business. My plan was to scale that down naturally, but with the market and with people staying where they are and people working from home now, that market is sustaining, and potentially if the interest rates come down, that could pick up again. We've got 12 loft fitters in that, and we our biggest, we had 21. So we're sort of half the size of what we used to be because that was just a decision we made through COVID. We may have to pick that back up again and just sort of sustain the sort of 80 lofts a year. But then I'm actually going the opposite way to what Dorian just said. And actually I'm outsourcing now because I don't want to grow a big team. And I think when you said about the biggest challenge, ours was trying to franchise Sky Lofts because it is just a different level of energy to get that to work with, building a system and a process that works from A to Z and to have it running well is one challenge. And then to try and duplicate A to Z 23 or 24 times across the country, you need so many layers of middle management. I'm not a manager. I'm definitely more of a creator on the disc scale. It's more of an influencer. I like to try and influence the position or where we want to go and bring everyone on board and build the culture. But I'm really not a manager, and I'm yet to see to work alongside a manager who is so good at managing the people, because that is the hardest bit of trying to grow any business is growing that team. So I like to stay small, stay nimble. We can divert depending on what the market's doing. Surround myself with a great culture. All the fitters we work with, I love working with them. I think they like working with us. They've been very loyal. Our average length of time that our fitters have stayed is like 8.5 years. So that's quite a long time to work with them and to build the whole business up to suit them and their lifestyle and to give them the money they deserve, and for them to have a good, quality of life as well is rewarding. But as soon as you go to that middle management and trying to grow, you sort of lose that touch between the guys who are on the ground doing a good job and yourself. And the further that distance get, the more corporate you need to become. And I just didn't enjoy that. And I thought, this is not going to be right for me as a person and for what I want out of life. There's money is one factor, but it's not the be all and end all. I'd much rather be happier and enjoy life. So we created these other businesses that are smaller that all work together to get us to ultimately a direction which is to be cash flow positive, to own assets. And obviously my big passion is real world assets and Bitcoin, as we all know. And that's basically my life in a nutshell.
I think your aspirations are more, I wouldn't say you're lifestyle driven, because we all work bloody hard and we all run these businesses, but I'd say you'll probably lean more on your lifestyle, don't you, in terms of you want to actually enjoy life and not just think about work 24/7. And I know you probably end up thinking about work 24/7 anyway, but would you say that's a fair assumption, that you don't want to scale these businesses out, the way Dorian wants to IPO? I want to build a more corporate enterprise. I know Jack wants to build.
I think if I go back 10 years ago, I wanted to take over the world. And as you do, and it will naturally happen to all four of us, is that when you get to sort of near your 40s and you get towards 45, you start becoming so much more content with where you are. You look back for 4 years and go, bloody hell, what a journey that's been. You look back 10 years ago and you look back 20 years ago, when you get to that 40, 45, you start just accepting that you are where you are. You've enjoyed the ride. And also, you just want to enjoy life. I wanted to retire at 45. That gives me 6 years left. I think I can do an awful lot in 6 years and I'll get to a really nice position. But I also think that like we said, but offline just before we started, is that you only really start seeing the money when you stop growing. And so I don't want to be in my 60s when I stop growing and then go, great, I've got 15 years, if I'm lucky, of a decent life. I'd much rather have 25 years of a very comfortable life. Who knows? Who knows? In 6 years' time, I'll probably want to retire at 60. And
I think that's so important to Stuart. I think that's, one of the best phrases that anyone can take on board is you only see the money when you stop growing. I say to our team all the time, Ben and I have been the least paid in this company since it started, and we only started paying ourselves halfway through the journey of being in business for 8 years. And I completely agree. The smaller deals fund the bigger deals, soft costs, and then you got to keep recycling it. No, I completely agree with that. Over to Rye, your go.
Yeah, I mean, so yeah, I'll run through from the start. So we started off as all of us pretty much started off doing our own developments, where it's just me, my dad, my brother, tackle a project, move on, tackle the next project. Then we might start running 2 projects at the same time. We did things very quickly, but that's the traditional way most developers will start out. Just for anyone listening, most people just start by tackling a project, figure out how it all works. But we came at it very much from a business angle. We came into property with no real property experience. We just knew fundamentally we could productize this as an investment class. We knew we could do that, and that benefits from Dad's background, who's been in the investments and raising for large family wealth. I can't say too much about the specifics of what he did and who he worked with, but raising large sums of capital for funds in London. But very different way of raising capital to what we do in property. It didn't necessarily translate the same. It was a new way to learn how to raise money against property. Easier, much easier, because it's a tangible asset and people understand it universally. It's not like selling, arbitrary investment products or alternative funds and all kinds of shit there where you go down. You could go down for months and months and months of consultative sales and get nowhere, but then you might get one guy who then goes, cool, I'm going to put in 50 mil. And then you get the trail on that. And it's a different approach. Whereas in property, you kind of, if you got a deal on the line, well, you need to get it over the line. So we wanted to learn that process initially ourselves and then start raising money for joint venture projects. And, I'm not saying, we look to the future and went, that's exactly what we're going to be in 5 years' time, but we kind of are where we thought we would be as a business model, where we productize a service, create a large pool of investors where we're diversifying of these different pools for different projects, have some joint ventures. And then it came along about 3.5 years into us doing property, to then go, well, why don't we just not actually do joint ventures and not own the asset and just do it as a service for clients? Because we're building up enough interest now. We don't want to have a load of joint ventures into the future and all these different relationships to uphold different agendas and incentives from different shareholders. We didn't want to build that sort of business. And I took some good advice off people who'd been long in the tooth in property. And a lot of them ended up divesting away from their joint ventures as time went on because it gets quite hard to manage. So we thought, why don't we do the same process still, the same product, but do it for investors, and we just take a fee for the service. And at the same time, and this is going to the start of last year, really, is when this sort of epiphany came, because not only did we need the cash flow, we wanted to diversify and not just be stringing in money all the time, always going back into our own developments, but actually create some cash flow positive streams of income on the side. So that's sort of how it started out. And then quickly we realized how much investors wanted this service. It's crazy how many investors are out there who would just love to get into property if someone could just provide an end-to-end solution, and they'll pay a lot of money for it because they are offloading a lot of risk, a lot of time, a lot of hassle. So we then incorporated the sourcing and acquisitions company, which goes out, finds properties for ourselves, but also for investors as a service. And then very quickly, straight after, we did sort of happenstance, but we knew we wanted to take the construction in-house, not necessarily in the way we did. We thought we'd do it more from a principal contracting standpoint and manage the trades, but we actually just took it all in-house because during the pandemic, during interest rates rising, during all the carnage in the market, we had to take on one of our big projects at the time. We had to we had to become the contractor because the contractor was going bust. It was becoming a shambles. So we kind of got thrown into the fire of construction, and then had to figure out that operational vehicle, as well as figure out the sourcing acquisitions and streamlining that. And then we also had the lettings come on at the same time, which again just happened to be, we got to that critical mass where our own portfolio would pay for a full-time letting staff, and we'd save money on management and get a better service for it, because I just didn't think we were getting a good enough service. So we kind of incorporated 3 companies all at the same time, construction being the most difficult, but all at the same time. But then that actually created the end-to-end service almost instantly. So I don't know, in hindsight, was it luck, or was it just like we pushed so hard in different directions that we just forced these things to happen, created good partnerships, and just went, cool, well, now we had this idea to create this end-to-end service, and we were going to do it kind of phase it in, but instead, because of circumstances, we've done it all at once, and here's an end-to-end service, and investors just flocked to it. I just loved it. And investors are coming to us through social media, not even have to come and meet us, not even see the sites, and they're making 200, 300 grand investment decisions based on what they're seeing online. So very, very happy that we did it. It made a lot of sense to do it. And those are our core businesses. So we've got our own developments, our own investments and things like that. And then we've got the sourcing acquisitions, the construction, the lettings, and we've got a sort of side thing with the courses and the training, which is basically just a way for us to monetize our knowledge, because why not? We're building the social media, so why not create a course to show people how to do what we do? But the whole intention of creating this end-to-end service is to create foundational structure with our teams and our management and that middle management that we've been talking about, so that we can scale a large development business that starts with HMOs, goes to apartments, then goes to larger schemes, and eventually does the build to rent stuff, where we will end up fluffing out the teams, because I'm actually quite keen to try and build a sort of larger corporate enterprise that does work nationally and potentially internationally one day. I'm up for the challenge, and I want to build on the moon, which I know sounds crazy, and I know I've said it before, but when I was a kid, I used to say it, and my dad would take me to meetings with his business partners or with his colleagues or with investors or whoever, and I was really young. Like, this is from when I was like 8 or 10 onwards, and I'd always just get involved with the conversations and talk and chat. And at the time, I used to bang on about space and the space race and be like, I want to like be a part of the space race, and I talk about it all as if I knew what I was talking about. Obviously, they'd have all been going, bless him, but like, he's got some ambition, and it's still stuck with me now. I want to be a part of the space race, and I know I can't do that with a small business, so I have to build a big business if I want to hit my North Star. So that's sort of one of my underlying drivers, and that's why I want to build something big. And I think a development business is a great way to do it. And if you can raise money with investors, you can kind of build anything, literally anything. But property is a great solution for investors who need to put capital to work and make returns, and for people like us who can provide a service and make margins on doing so, but also retain some of the assets. But that's our core business and why we've done it. Yeah.
We can't ignore that you're obviously in music before. When did you go, right, property now? Can you hear that from my dog's ears?
Yeah. I mean, that was 2020. So I was trying to make businesses whilst I was in the band. I was trying to create side hustles, because if I'm honest, the band wasn't taking up enough of my bandwidth. I wanted to do more. And there was some constraints in the music business as well that kind of hold you back, and you're trying to look for a label or look for a record deal, but you want to stay independent and cash flow, and very, really difficult business. Like, property and development's hard, but trying to build a music business is fucking impossible. The odds are just stacked against you from the start. So I knew I needed a side hustle. Tried a load of different things, and then just saw a Samuel Leeds video. And he was just talking about buy a property cheap, refurbish it, and then refinance it for a higher value and pull out a lot of your principal. And I understood that and went, oh, what is that? What's that? And then started speaking to Dad about it, and it just sort of snowballed from there, and ended up just going, right, well, let's can we pull the money together to buy our first deal? And then the music business ended because of COVID.
So you're completely raw to property, completely just stumbled across a video on YouTube and thought, I'll have a bit of that.
Yeah, and that's exactly how I got into music. Stumbled across a video on YouTube and just went, oh, I saw a One Direction trailer for their documentary, and just went, at the time I was like, oh, that seems cool. Like, imagine being a band that like plays around the world and like does this cool shit. And I didn't know I could sing really. And just went, yeah, fuck it. I'm a student of YouTube. Like,
It's
YouTube has
funny.
led my life.
It's fun. I was watching a Alex Harmozy video, and he said he was given a talk to this like subscribers, and he said, out of everyone watching, who here would be happy with a business up to 100 million in terms of enterprise value, like who here would just wants more than that, or would you be happy with up to 100 million in enterprise value? And obviously everyone on the call was like, yeah, up to 100 million is fine, surely. So he said, if you can build pretty nearly. You don't have to do anything extreme to build a business up to 100 million in enterprise value. Like the paths and rules are all laid out there. Don't get me wrong, it's not easy, but is all the businesses are established and there's enough market share in the vast majority of them for you to build a business of that value should you want to. And then, as Stuart said, the more you do, you'll find your spot of contentness. And that's different for everybody. I'm not doing this because I'm after a certain financial figure, so to speak. I'm, and all of the goals I put out on here, they may change in the future. All I know is right now, as I speak to you, I have no plan of stopping. I want to reinvest everything. I want to make the biggest impact I can, and that will just naturally mean bigger deals, bigger numbers, more areas, all that sort of stuff. But it could change in the future. But I think really, you know, there's you don't have to break the mold here, as what you said there, Ryan. The solutions are all quite simple, and you have to carve your own specific niche. But we're not first movers here. It's already been set out, and you can build a big business if you want to, up to the size and level and stress and cash flow that you deem fit, without trying to do something completely new and innovative. Really,
Yeah. A lot of people
Yeah,
make
I think
those mistakes.
Yeah, no, don't get me wrong. I still want to build. My goal is to build £100 million property portfolio. I just want to do it the least path of resistance, without the least amount of stress. And I think that's a fairly manageable target. But setting up IPOs, trying to go international, I think there's just so many steps. Unless you're going to really want to spend your whole life, and it's all down to legacy, right? I mean, Dorian's legacy at the moment, being 28, is to build a national company. I totally think he'll get there, and I think it'll become the biggest social housing provider in the UK. I think because his dream is to do
thanks,
that.
Stu.
I totally think you do, mate. I think you will make it. But ultimately, I just want to enjoy life a bit more than trying to run a big business like that. Because trying it once, and maybe it was the first time, I just literally found it so stressful. Every single decision every day was just getting more intense, more money. And to grow to those next levels, it's like that canyon that Jack talks about.
Stu, would you say you like, because I really like managing people. I really like looking top down and just eradicating myself from shit and just going like, how can I move like these bits about? Like, there's something about it that I like, but you don't necessarily enjoy that part.
No, I love
You don't
building
like
a culture, but I think the bigger you make the culture, the less distant you get. So I actually prefer working with a smaller group of people. When I say smaller group of people, I think, knowing 70 people's wives' names, children's names, family, and what they're about is more important than trying to run 250 people and not knowing any of them. So that's the sort of size where I feel like we can get to our goal at the size we're at. Yes, we need to bring a few more people in, and we probably need to get rid of a few over that period of time. But running a team of 250, 400 people just doesn't excite me. It used to excite me because I thought that was the way you made growth and wealth. But now I found a cheat code, which means I can get to my target with less people, bringing them on the journey with me. And I think that's the difference.
I think it touched on something quite interesting though, because I'm definitely quite different in that sense, and we're all different in how we are just as people, and obviously then as managers and as business owners. I'm the guys know I'm quite cold. I don't really want to do the small talks and talk about people's families or talk about what people get up to. I'm very like to the point. I don't want to get involved in people's stuff because I want to build something big. And I know that if you want to try and keep those, if I build this business based on my rapport with individuals, it will be my shortcoming. Better to then have people within the business who can drive that culture. who are better and more on the ground at doing that, and I'll just keep making decisions from the top, sort of behind the scenes, and it kind of keep it that way. It's kind of like a curtain where I'll come in, happily chat, happily, talk and have fun and whatever, but I don't do messages with people or call them or anything like that. Like, I try and keep everyone away from me in a way, because they know that I'm better just here trying to drive and build. And I think that maybe that difference in mentality, just as a person, maybe leans me in. Do you know what I mean? Like, there's traits
totally.
we have.
Oh, don't get me wrong. I'm not sitting there WhatsApping all night to
any
of my staff. You know what I mean? But when I turn
You're
up to a
very
start, I'd like to
personable.
know. The only way I can see it happening, because without that, I think you get resentfulness. You can get cancers growing through a business quicker than you can blink. You take one bad employee on, who
Agreed.
comes in to rob you, steal from you. I mean, we all know. We've got a good friend of ours who's just been absolutely robbed to pieces, and that is so easy and so quick that it can like a stack of cards. It can come down like that, and you're over. So, and by having a few bad eggs in the past who have joined for different motivations, and then they've basically tried to fuck it or tried to fuck you or steal from you, it's not nice. And I think that on a bigger scale would be detrimental. And obviously I'm growing this slowly, step by step, because I don't want the failures to happen where you could lose everything. And we also know developers who have grown so quick and then lost everything and had to start again. And that's equally as scary. So you got to balance out what you want out of life versus how you get there, and you've got to path your own, cave your own way. But ultimately, diamonds are born out of pressure. So putting yourself under a certain amount of pressure will get you to where you want to get to. So I'm all up for working hard, and that's it. But ultimately, that growing the construction arm is the hardest bit, and Dorian as well. That's why Jack stays well away.
No, I fully agree. The construction arm is really difficult, and I've also, growing a business. We're at 50 team members at the moment between construction and groundworks, and along the way over the years, it was been literally probably in the 100 plus of people that have been involved with, and I've had already a fair share of dealings, which that if you have to cultivate that team as you grow so carefully, because that will be a downfall. But it is really difficult, and like I said, my goal could very much change in the future, but at the moment I'm still committed and focused and excited enough that it's not changed. But I think really though, the key moral for all of us and anybody listening is the more that you can kind of just understand what you want, then like the goal, the key message here is that it's not rocket science. You can just reverse engineer into an established route and grow something meaningful to achieve your goals, really. And you could do that with a very small team. Like, I know one company that they deal with huge developments and they make serious money, and they've got a team of 5. They've got that's going down the development management route. And you can do that. You can really do that, and that's absolutely fine. There's just so many different ways here that you can build it how you want.
That is actually our plan, is to keep the management side. Like with the construction, we just want to be a principal contractor and just subby the trades out and just manage the management and create good incentive structures. And I've spoke to you about this before, guys, where we made the mistake of trying to do it all in-house and trying to capture too many things within the operations. There's one thing capturing the source and acquisitions, the lettings and the construction as like an overarch, but then to take on the architectural side and all of this and all of that and all of this, like, could suddenly become like, fuck me, you're dealing with so much nuance that why not just subby out those items? Because it's just so much fucking easier.
I went for lunch with a good friend of mine who's my age, based in London, and he wanted to do exactly that model. So yeah, that's when I changed the direction of what Dorian said about. I think I know the same company he's talking about, but they're doing £1 billion worth of turnover a year. They got 4 or 5 of them, and it's just mental. But then equally, my friend who I went for lunch with, he was trying to build a small core team and sub everything out. And the trades he was taking on, literally, his contractor didn't pay his electrician, so they went in site and they chopped every single cable out of the building. He's like, why do I want to do that? One of his other contractors threatened to kill him and his family. He literally was like so depressed trying to run and scale that he actually doesn't do any development at all now. He does planning gain, he finds land, he niches on it and sells it on, and doesn't even touch the building side because it's just not worth the stress. He said he was literally suicidal. And when we go to these networking events, I don't really go too much anymore, but when I did, I was surrounded by 99% of people all talking about their builder and about how many problems they're having and the stresses. 99% of their world pain was from the builder. So that was actually a big strength of us and allowed us to sort of bring that in-house. And that was an organic change. But yeah, that's the thing that will happen with Scow, is that these little cracks you're having now in the building construction side, as you try and keep a small core management and just scale this out, those cracks become cabins. And if you've got 5 or 6 of them happening at the same time, you know, if the builder turns around and said, we need 100 grand or we're going bust or we're out of here, and you've got 4 or 5 of them happening in the same week, those cash flow problems will outweigh the growth.
This is why even with the construction stress, we manage it in full pretty much and split down to smaller sub trades because the risk the other side was, you know, when I was a private developer, I used the main contractor and I had exactly that issue, Stu. You know, they took a val was agreed, paid, didn't do the next val, submitted the money and said, you didn't do the work for that. Said, well, yeah, if you don't pay me, I'm going bust. So what do you want to do? I was like, well,
you're snookered, aren't you?
Just touching on forms of management, because I think I'm similar to Stu in the sense that I'm in the trenches with the team, building that culture and actually interested in them. And one thing that I don't think we have touched on is I would argue that 99% of our employees are not working in our businesses for the sector or the products. They're actually doing it because they like us. And I think that's a really cool company culture. They're kind of on board with, like Stu said, with the journey and want to specifically work us. If they have niggles in their, you know, their work contract, they want more hours, you know, deducted for holiday. It's more that conversation rather than don't like the projects, don't like the structure, because we are that very fluid, culture-driven organisation. But what I wanted to then move on to, because we've all sort of shared we're all in property, which is obvious, property and construction. Now we've all shared our sort of group structures and different companies that we've got going on. Let's just for 1 second, like, brainwash everyone, think we're not in property. Do we all think we'd be doing a similar thing according to our personality type, our sort of disc profile, growth type, you know, family orientation, motivations? Do we think we're building out a business that's very similar to what, you know, if we had to start again in a different sector, it would look very similar? The reason I ask that is because I do see Dorian as probably more of like a Lord visionary profile. You know, he likes the sort of large machine with loads of little cogs and getting into every cog.
That's correct, Jack.
Exactly. Whereas,
did we share our disc analysis on?
I think
on our
Stu
group?
and I are a very similar profile, sort of creator style mechanic, like the numbers. But at the end of the day, we're coming up with the ideas. We're happy to lead from the front, and we you know, look around the people around us and help them help us get there. If that makes sense.
Yeah, we shared our disc analysis, didn't we, on the group? I was just looking for it.
Yeah, I think if I was in a different sector, like, again, I do think that I would inevitably end up in, you know, the similar role, because my type of personality, I call myself a visionary in terms of bigger thinker, look at like the macros, see a big opportunity and feel like have the self-confidence that it is possible. I don't mind looking at something huge, because I'll just automatically start reverse backing it down to the simple steps you need to make to get that. And I understand the power of compound and team. But then ultimately I would then go into detail into the visions needed to grow that, who's needed, exactly what they need to do. I would turn it into kind of like an airplane cockpit with different, you know, metrics. I know what's green, I know what's red, I know what's amber, I know what resources need, or the theory of it anyway, not to say it would work. And then so kind of whatever sector I'd be in, I would take that same approach and end up in that same, you know, the company would look and probably feel very similar. Does that make sense?
Yeah, I mean,
looking at the wealth dynamic. So I know that Dorian, Jack, and myself put ours in. I don't think you've done one right, but it's well worth you paying for one. So Dorian was primary profile was a creator, and his secondary profile was star mechanic. So very forward driven, but you're quite essential, to be honest, Dorian.
But if you look at the graph, though, because the problem with wealth dynamics is it just gives you the titles, and the titles are the same for everybody. But if I remember, I was creator, but I was more introverted creator.
You were more dynamo. You're more dynamo, so more forward thinking, but you are quite central. If you look at Jack, so Jack and yourself are the same. So you're creator, primary profile, Jack, and star mechanic secondary.
Mine was, I would actually argue, probably 10 to 11 years ago.
Yeah.
And
Changed.
what I found weird about doing that disc profile is it didn't pick up anything to do with deal making. And I would say that is, I get out of bed and that's the first thing that I'm thinking about.
Well, your
Taking
secondary profile is mine was creator supporter was mine, just to finish on that, was star as a primary profile, which I actually prefer the disc analysis because it's I can't remember the bloody titles now, but it's like high eyes and influencer, then you've got compliance, you've got dominance, and
I did mine as Briggs as well.
yeah, it was a really good one. But yeah, mine was, and then my secondaries was creator and supporter. So all three of us are creators as secondary, but that's not your primary drive, even though it's the bit you most enjoy and it's part of your profile. Jack's one was yeah, well, no, sorry, you are creator. Primary profile was creator. Yours was Jack, and then star mechanic secondary.
If you're too much the creator, though, you'll never really build proper teams around you, so to speak, if that makes sense. You might do it by like luck with a business partner, but the I think we've all had to learn. The problem with that, right, is that it's difficult because when you're a startup business, you have to do every role. So you actually, we've done roles in every single one of those quadrants or the matrix. And the problem is now where we're at is the lines are a little bit blurred because we're so used to doing so much. We're so used to such a broad role that really, like, I'll do anything that's needed to be done for the success of the business, whether it's Lord related activities, deal making related activities, star related activities. I'll go, I'll do whatever I need to do. But yeah, if I, for example, spend more of my energy in the stars and supportive role, i.e. going out there full on public speaking and spending a lot of time with people and building relationships, that actually saps my energy like really, really quickly. And that's the problem. I can do it, but it will sap my energy. If I have to spend a lot of time deal making and negotiating and accumulating all that side of like on the boots on the ground trading, that will also really sap my energies, but I can do it. But then my strength is definitely strategic vision and structuring. I can do that day in, day out, constantly, morning to night, and not lose energy on it.
Yeah.
I think that's the key thing is what can you do where your energy doesn't deplete?
That's definitely the right metric, isn't it? Like, what do you do where your energy falls off a cliff? But for me, it's operations. Like, I really don't like being in operations. Hate it. I don't mind setting up systems and getting stuck in wherever, we all have to as business owners. You just have to get mucked in. But I like setting up systems and fully learning and understanding how it all works, what the software is, what this and that is, who's speaking to who, like figure that bit out. But I hate running it. I really don't want to then be in there running and churning that clog. I can feel it just drain my energy. But it's interesting.
I call that starting and finishing. I start, Ben finish. Like that, and in my brother's business, I start, he finishes. I call that starting and finishing, and I think that is two completely
bar fights as well. Jack starts in, someone else has to finish it.
I just get so bored with doing the same thing. I just need to be on a new deal, new structure, new. It's got to be something else on the horizon.
And isn't that Jack? Isn't that where property is a great thing though? Because like you kind of can keep doing the same business and keep the continuity of your business going, but you get onto a new project and you're like, oh, a new project, yeah, let's fucking get in. Let's look at this.
Yeah, and then by the time you get, like, this morning, I had a neighbour complain that we need access to their site for the scaffolding. Now I'm fucking not interested.
Yeah. Hate
Go
it.
and buy another one.
Mate, I'm doing a Stop It Up application at the moment and like fighting the council and highways on this bullshit where they want us to widen this pathway. It actually went viral. I did a video on it and it got 150,000 views on TikTok where I was just explaining the problem with the council, and I'm going to go back and do a follow-up video. And it's just just drains. Like I look at the email come through and I've not even read the email. I just go, oh, fuck's sake, I've got to fucking look at that. And I know that obviously for this business to grow, I need to at some point bring in someone, either technical manager or someone who can deal with the council stuff, because it kills me. I hate it. I hate dealing with councils, local authorities, permissions. It's bollocks.
So when we put our core people in place, so the team we did have, we ran a disc analysis. So I'll read them out quickly. We'll just share the slide on the pod. So D is dominance, which is dominance. I is influence. C is conscientious, and S is steadiness. So dominance is direct, results orientated, firm, strong-willed, and forceful. Influence is outgoing, enthusiastic, optimistic, high-spirited, and lively. C is conscientious, analytical, reserved, precise, private, and systematic. and steadiness is even-tempered, accommodating, patient, humble, and tactful. You need a mix and a blend of all those personalities for a team to work, and that's really where you want to analyze your existing team and see where they are, put them on dots on a map, put it on the wall, find it, because it'll be a blend of how, if you're a high I or a low I or more central, and you need people who are going to be results driven and analytical, and people who are like more numbers based, more accountancy, more for your team to, you know, to take the right sights on and to make sure you're not getting too emotionally attached to something that's just not going to make you the money you think. So where would you put yourself, boys? Dominance, influence, conscientious, or steadiness?
I think self-diagnosis can be a
I definitely put Jack in the more central dominance influence. He's obviously enthusiastic, but definitely more firm, results orientated.
So coincidentally, Stu, you've met my brother. I believe I'm dominance influence, and I believe he's got zero dominance influence.
Right.
And he's all the others, and I've got zero of the other side. But that's why it works really well. Like, he's very conscientious, very thorough, and I would rather make the mistake and correct it than think about it too much. So our yin and yang is kind of that difference, if that makes sense.
Jack, you need to, at some point when you come up here, you should bring your brother and meet my brother, and it's the exact same dynamic. Like, my brother does all the things that he'll happily sit through and understand utilities and understand council tax, understand VAT, and go through it all, and he won't make a decision until he feels like he understands it, and then does it. I'll just go, what's the number? Let's just do that. Can we not just get away with that? Let's just fucking do that and move on to the next thing. But obviously, if you keep doing that, you create all this legacy shit behind you, and you need a Robbie or you need your brother to be able to sweep those things up and keep the business tidy. Also called Rob, yeah. To keep the business tidy, that yin and yang is crucial.
When we done this first with our existing team, and naturally I was high I on the exact opposite. 90% of my team were conscientious on the opposite side of the circle. So they were all analytical, they were systematic, they were precise, and they just knew how to stick to a process. So it's almost like we naturally took on people who would be a yin and yang of my personality. And obviously I'm quite strong eyes, so I need quite a few more staff members to be on the opposite side to keep it balanced. And then we had to look for people who are steadiness, and then my wife's the dominant one. She's the one who's very direct and firm. And if an email needs to go out, she'll write it. Oh yeah. She's a high D as well, so she likes to have a procedure and very strong-willed, results orientated. Like, don't fuck around, rip the band-aid off, and we go. And you need someone like that, because when you've got to make tough decisions in business, we'll sit of an evening and I'll go, got this problem, and she's like, right, you need to rip the band-aid off and go in there tomorrow. And where I feel uncomfortable doing it, she supports me and goes, go make it happen. And then that's how we get things done.
I didn't know you had that dynamic. That's fascinating. That's great.
It must be love.
Love, stress, and everything else that comes with it. Dorian, where do you see yourself, mate? And then
Ryan, I haven't done the disc profile, but I've done Myers-Briggs. So I just chucked it in ChatGPT and said, if I had to do the disc profile, here's my Myers-Briggs one. What would it come out as? And he said, they've said it's two different things, but put me as influence. So I, then D, influence and dominance.
Yeah, okay.
More so. I think, to be honest with you, all of us would have, because of our roles and what we've had to do in terms of start up a business and drive it forward, we're going to all have dominance in it and influence because it is needed. It's not necessarily, dominance is not necessarily about dealing with like customer complaints, for example. It's more about having a vision and saying, "Oh, this is what we're doing." Like, you are quite like that, Stu. You are like, you know, they call you the whirlwind. You said in your
Hurricane Stu.
Like, yeah, Hurricane Stu. Because they'll do something, they'll be like, no, we're doing this now. And then if they're like, no, Stu, I don't want to do this, you're like, you're doing it. So it's like, you know, that's
see, I'd put you quite central, D. I think that you've got a balance of everything. So even like the steadiness as well, like you come across, I mean, I don't know what you're like in a business environment, but patient, humble, tactful. I think you've got all those qualities. So like a bit like your wealth dynamic, you were quite essential.
I'm just perfect. Yeah, what can I say? What can I say?
Pretty balanced, mate.
Apart from that absolutely dreadful haircut, you're perfect.
Oh mate, I've been playing with this the whole episode. I can't deal with it. This is probably the worst haircut I've ever had in my life.
At least you got hair. How was prison time, dear? All right.
No, don't. I specifically said don't cut it too short. And look at it. I'm literally one shade away from having two or one all over.
I've got a haircut. I've got a haircut booked for 2:00. I'll just make sure I don't go to that one. Right? It's the Turkish barber, that one. They don't look too bad.
I've got one last thing for us to finish on. Just this is spontaneous based on something Stu just said, because it's interesting how we all know each other pretty well. granted, we didn't all grow up together, but we know each other enough to know each other as people, to know what roughly to expect from each other, our personality traits and things like that. But we don't really know each other in business. We don't know how we operate, and we don't know what our strengths and weaknesses are, really. We can only assume things based on high level stuff we've seen. And I think it's the same with other friends we have as well, or other business partners or investors that we might have. And you kind of assume things of people and how they are in certain scenarios. And I don't know if this will go anywhere as a topic, but I don't know if you guys find that interesting, because especially when choosing business partners or choosing investors or clients or whoever to work with, you always get this high level take on people and you make assumptions on how they operate or assumptions on who they are. And this disc profile is, I think, the sort of epitome of that it assumes things, but you can change your character or change your traits. I think you can anyway, circumstantially, especially when building a business, because it carves out the shit. If there's any weak parts of your character or weak parts of you as a person and you build a successful business, chances are that during that building process, you've probably cut off most of the fat and the excess that you have, and you naturally become a slick operator or a good business owner or a better person.
You're basically saying we're all psychopaths, right? We can change our personalities in a heartbeat and go, right, we're now doing this, now we're doing this.
Do you not think that's the case, though? Like, yeah, because
sociopath, is it sociopaths? I think that's what
sociopath. I think psychopath's a bit far. Yeah, because you think about who you have to deal with. Yeah, like on a.
Yeah.
On
I reckon Dorian's hairdresser's a psychopath.
He's making him a psychopath.
I can't even defend myself on that because I don't disagree. It's shocking. Look at it.
But just think about the level of like bandwidth you need to do, especially what we do in developments. Because like one minute you could be speaking with a high net worth investor, the next minute you speak with a lawyer, then an architect, then a builder or a surveyor, and then your team, then your brother and sister, then your missus. Like you have to switch between so many different paces of temperament, like all the time. And I think it does carve you into being like a certain person. That's any business, really, building any business, but especially in property development, because you are raising finance and having to sort of get into the minds of your investors, understand what it is they want, what do they need, and you have to kind of sympathize and create all these different sort of emotive things in your head where you can balance multiple people and dynamics, where a lot of people can't do that. A lot of people have just their friends and they're all sort of similar, and they can't deal with like, oh, that person's too much for me, or that's too this for me, and their mind can't take it. But I think you have to be built differently, don't you, to do this?
I actually struggle the most with communicating with the missus, because we've been served problems day in, day out.
Don't we all, Jack?
Our first thought is solution, and it's fast paced, like very intense, and it's all of the opposite stuff that she wants to communicate about. She wants to be not intense. Where she often says to me, "Why are you so intense?" And it's just because I'm speaking to her the way that I'm thinking day in, day out in business. And it's not the way that I obviously should be communicating. And I actually found that part, just because I'm always quite, I'm always firing on all cylinders and just charging down problems and dealing with problems. And that satisfies me. But sometimes they don't want solutions. They just want to chat. And then also I get tired of being in the business that I don't want to talk about it. So I don't, Kelly will be like, "How's your day?" And I just won't want to. I just can't be bothered to talk through it because it's already been through in my head.
Yeah.
Whereas that they like to talk about who they met for coffee and how their day went, and they dropped an apple in Tesco's and then they only bought a bag of 4 apples rather than 5 apples. And
actually, I've switched off already, Jack. I can't listen to that.
It's true though, isn't it? It's so hard balancing that relationship with your missus, like as in keeping what's the right way to say it? Like keeping
every sentence Jack was saying there, just more and more anger was just being built up inside. I just can't. This is like a fucking boiling pot. I don't know what it is, but yeah, I'm the same. I just can't deal with it.
Trivial conversations, yeah. Yeah, it's a lot but you have to, don't you? Otherwise it's gonna be lonely as fuck.
My wife calls it going into my own world. I've got a tendency, unfortunately, to disappear into my own world, where I just enter this like zone, this hyper trance zone where I can't speak. I'm not paying attention, and I'm just literally. It's not like zombie like. I'm there. I'm full of, but I'm not really engaged in conversation. There's no and it's difficult, because like it's not something that I'm trying to do. It's just something that my state is automatically doing, putting me into, and I have to really fight sometimes to get myself back to what's classed as normal. And I know it sounds stupid, probably listening to it, but it is what it is. You need a partner that understands you. They understand. They have to. So my wife knows when I've disappeared into my own world, and she's got some tricks to get me out of it, but which is mainly shouting at me. But
I've got two for that. So have you guys heard of the 7-year itch? 7-year itch is where you basically have this, you become obsessed with it, especially with business. You get to 7 years, you can do like a full 7-year cycle, and then you just crave to do something else. I think we've all got that. But my first 7 years, I lived, breathed, spoke about business and Skylofts in every conversation to any family member, and it drove my wife insane. So after 7 years, effectively COVID almost happened, or just after that 7-year period, and then we went into the property development thing for 7 years. I was going to say something else, but I've completely forgot. Oh yeah, we've got a thing. So when we're speaking about something, and if I'm doing her head in, basically, we've now got a code word, which is cool story. So I'll be banging on about something, and if she really isn't interested, she'll go,
story, bro.
Cool story. And I'll go, that's a trigger. So it doesn't affect it. We don't have an argument. We don't have to do anything.
Cool story, bro.
Just get cool story. That's it. Okay, you're bored, and I don't want to bore the hell out of you anymore.
But you found balance.
Relationship balance.
See, I'm completely weird. My missus wants me to talk way more than I actually do. If we're going to dinner, I don't want to talk about business.
She's American, man. They love talking.
Yeah. Mate, do you know one of the coldest responses though? When you took the coldest responses is when not just anyone, if you're talking a conversation and then someone just goes, "Good for you." That's just what a cold response. That just sums up that you've said something that's come across really dickish or arrogant.
I've got an example of a conversation I had with my missus. I hope she won't mind me sharing it. But basically, there was a big time celebrity. Fuck it, shall I say? Yeah, fuck it, I'll say it is. Hugh Jackman was in Henley training in her local gym, and she runs a meal prep company in California, and he actually lives most of his time in California. So she came up with the idea, which I highly commend, to cook him some meals here, brand it up as if it was in California, get him down to the gym so that he could have the meals. So anyway, she was prepped the meals, got them to him, and he took the meals on, and then it was then that silence of, she's just probably given, he's got millions of social media followers, probably one of the most famous actors in the world, and she's got, if he shares her meal prep company in California, it could be, explosion overnight. So it's a very good influencer to have it on. But anyway, in that quiet period where the meals were in his possession and she didn't know what the potential outcome was, she was like stirring, like super nervous, didn't know how to take it. She was worried. She was doubting herself that she was not a qualified chef, but she runs a meal prep company and she's cooked thousands and probably, hundreds of thousands of meals in her lifetime. And me being me, not being very sensitive, and I should have gone in and been, "You're an amazing cook. He'll be fine. He'll come back and respond. Don't worry about it." I just said, and this is legitimately what I said, if your meals aren't good enough for him, why are they good enough for every other customer? And that was the first thing that I said. And as soon as I said that, I thought, fuck, I shouldn't have said that.
Fucking hell.
Wow, all right. Well, Hubby of the Year award goes to. We'll see Jacob on the short list.
I smoothed it over. I obviously, we're all psychopaths, so I smoothed it over, changed my personality, and
it's good to have a bit of yin and yang, though, isn't it? It's good to sometimes tell someone something cold and see how they respond. But that's pretty brutal. That yeah, cool. I mean, that's a pretty long episode now. We're at 1 hour 52 minutes, and we've. Yep. That was the plan, basically. Just
time to go do some real work.
Yeah, trying to go make some money. Make some money, baby. So yeah, thanks everyone for listening to this episode. We release these podcasts every Thursday at 5:30 a.m. on Spotify and YouTube. This is the 11th pod of a 12 episode series that we planned from outset. We wanted to get our teeth stuck into this, do it for 12 episodes, see how we feel, rain check, and see if we'll continue doing it. So let us know in the comments if you want us to keep going, if you want us to keep session this. It is quite enjoyable. I think just for us guys to get around and chat shop.
Well,
and talk about
I read a stat.
It's a live Zoom call, isn't it?
Sorry, it is. But just quickly before we go, I read a stat that out of all the podcasts, to be in the top 1% of podcasts, you have to do that. Like 99% of podcasts don't make it to the 21st episode or past 21 episodes. Whatever we do, whatever we choose to do, I cannot finish in the not top 1%. So, with or without you, I'm going to 22. So.
I'm with you, baby. I mean, to me, this is starting anything is like a 3-year project, and you need 3 years at anything to really like give it a go. And podcasts are brutal because it's a competitive space, and there's a lot of people doing them. And
can't not finish in the top 1%, mate. That's enough for me. That's the start.
All right, we've got a new goal then, guys. Top 1%. D's going to clock it. But yeah, look, go on.
I've got 2 tips before we close out the session. Tip number 1 from a very good friend of mine called Dorian Payne. If you're going to get your hair cut, you take a pen to line up where your haircut gets cut to. That's tip number 1. Tip number 2, don't go and get your hair cut with Dorian.
Yeah, thanks, mate. Appreciate it. And again, I can't defend myself on those jibes today. So
are you going to go back? Are you going to use a different barber, or you going to the same place again, or just going to take?
Well, it's the same normal barbershop I normally go to. It's just a different barber, and so this time I won't be going to the same barber this time. But I'll still use the same. I can't knock the business for its team members. It's probably my fault it was probably that I should have maybe done what you said. There's the language barrier. I should have went there with my ruler and just kept it.
True leader.
I said, right, I'm not moving it. This is where you go into at the fringe. Yeah.
So you done there,
cereal bowl. That'll sort it out.
Cut around that. So what you done there, mate? You took ownership. You lived above the line, D.
Look at that.
You lived above the line automatically. You said you took full ownership, accountability, and responsibility for your own fuck ups, which is what a real business leader should do.
Mate, it's what you got to do. It's what you got to do. But I can't take responsibility for this. I need to go sort that out.
That's a hair transplant job, that, mate. Been there already. Anyway, thanks for listening to the episode. Drop us comments for next week's episode where we'll answer some more questions. Big love, and see you in the next one. Bye-bye.
Bonjour.
Ground up sound.